Subscribe to our YouTube channel and press the bell icon to never miss any update from Samco.
Hello everyone, I am Anuragh, and with a slew of new IPOs hitting the market, we have yet another IPO coming in form of KIMS Hospital. The company is looking to raise about Rs 2,100 crore, which includes a fresh issue of Rs 200 crore and an offer for sale for the rest of the shares. The issue period is set between 16th June and 18th June, with the price band set at Rs 815 to Rs 825 per share, with a lot size of 18 shares. Krishna Institute of Medical Sciences is among the largest healthcare groups in Andhra Pradesh and Telangana in terms of patients treated. The company operates 9 hospitals under the KIMS Hospitals brand and currently has a bed capacity of 3,064 beds with over 2,500 operational beds in 2021, which is 2.2 times more than the second largest provider in AP and Telangana. With the strategic placement of its hospitals, KIMS is well placed to attract patients from Andhra Pradesh, Telangana, Karnataka, Odisha, Tamil Nadu, and parts of central India. Moving on, we start with looking at the top-line growth of the company. As can be seen, KIMS has seen a linear growth in revenues over the past 3 years from both its inpatients and outpatients segments. This has allowed the revenues to grow consistently at 20% CAGR over the last 3 years to over Rs 1,300 crore in FY21. When looking at the operating metrics of the company, we see that it has underperformed peers in terms of both average revenue per operating bed and average revenue per patient. This is because KIMS is still a smaller player and provides less specialized services in Tier 2 and Tier 3 cities. A lower realization per patient indicates that it is less efficient in generating revenues per bed and patient and needs to significantly work on it to catch up with peers. Now, with the operating metrics of the company being weak, the company makes up for it in generating a strong set of returns for stakeholders. As can be seen, KIMS has seen a consistent growth in both its ROE and ROCE and has outperformed its peers in terms of ROE. This is primarily driven by a strong profit growth and efficient capital management, which augurs well for its stakeholders. Overall financials, company has seen consistent growth on both its top line and bottom line, and has also managed to improve its margin profile over the past 3 years, driven by cost efficiency and focus on profitability. Along with this, KIMS has also maintained a clean balance sheet, as indicated by its low debt to equity ratio at 0.27 times. While KIMS has a healthy financial profile, it faces numerous risks. As COVID-19 hit in India, a lot of hospitals were repurposed to serve patients of COVID-19. Many patients refrained from going to the hospitals from fear of catching COVID-19 and delayed their surgeries. Along with this, medical tourism also suffered as international restrictions came in place. Any potential waves in the future can similarly impact the company negatively. 57% of doctors under the company are on a consultancy basis, with many doctors not working exclusively with KIMS. The company also has a high attrition rate of consultant doctors at over 39%. With a high dependency on such doctors, KIMS faces risks of not having required professionals on demand. The company derives over 60% of its overall revenues from Telangana. A high level of concentration exposes KIMS to high risk from any regulatory issues. Any reduction in that hospital's revenues can have a significant impact on the overall performance of the company. Given the high regulations of the healthcare industry, KIMS is subject to risks arising from any action undertaken by the government, which may move to reduce patients' costs or increase taxes from these facilities. Such measures can significantly impact the growth and margins of KIMS. KIMS has among the weakest operating metrics in the industry, but makes up for it with high return ratios and strong financial profile. But KIMS issue period clashes with other IPOs, and because there are a couple of other PE VC backed names with issue periods in the same week, retail investors might look at others who have a comparatively favorable risk reward profile. Given these factors, KIMS may not deliver strong listing gains as other new IPOs. Therefore, investors should subscribe to this IPO for listing gains with utmost caution, and only if they find it suitable from a risk perspective. Otherwise, this company's future quarterly numbers can be observed before taking any long-term investment decision in it. Thank you.